Hey everyone, it's Josh from Blockchain DXB and welcome to another exciting episode of Blockchain DXB, your go-to podcast for all things related to cryptocurrencies, blockchain and even artificial intelligence. Now in today's episode, guys, we will be delving into one of the most influential book in the cryptocurrency world, or to be more precise, the Bitcoin world, and that book is called as the Bitcoin Standard, which is written by Dr. Saifedean Ammous. Now look guys, whether you're a seasoned Bitcoin maximalist, a crypto enthusiast or crypto newcomer, this episode is designed to provide you with a comprehensive understanding of Bitcoin's role in the evolving financial landscape. Now, what is it that you can expect in this session, guys? I'll be touching upon the historical context, so we'll explore the evolution of money, from ancient barter systems to modern digital currencies, and I will be highlighting the economic principles that underpin these changes. We'll also go ahead and take a deep dive into the concept of sound money, where we learn about what sound money is, why it's crucial for economic stability, and how Bitcoin embodies these principles. I will also touch base on the technical and economic analysis, so we will break down the technical aspects of Bitcoin, including its decentralized nature and security features, and discuss its economic implications. I will also do a comparative analysis, guys, so we will discover how Bitcoin stacks up against traditional fiat currencies and what sets it apart in terms of inflation, resistance, and deflationary characteristics. We'll also talk about some of the criticism and counter-arguments regarding Bitcoin, because look guys, this particular book, Bitcoin Standard, definitely goes and tackles all of these areas, so I'll address some common criticism of Bitcoin and provide insights into arguments made by Dr. Saifedean Ammous to counter these points. And finally, guys, we'll get a glimpse into the potential future of Bitcoin and its impact on global economics. Now listen, guys, a special shout out to ChatGPT 4.0 for providing a detailed note that have made this deep dive possible. So let me know, guys, what are your thoughts regarding this. Now before we go ahead and kickstart this episode, I have an important message, so check this out. Thank you to our sponsors for being part of the Blockchain DXB journey. Firstly, Advanced Media. Advanced Media, guys, is the largest distributor of professional video, photo, broadcast and cinematic equipment and accessories in the Middle East and MENA region. With over 2 decades of experience, Advanced Media is now the largest distributor in the Middle East, representing more than 100 recognizable brands, including brands such as Zeiss, DJI, Hasselblad, Red and Rode. As a matter of fact, guys, the very mic that I'm recording is being sponsored by Advanced Media as well, and Advanced Media has showrooms in Saudi Arabia and services as well. Looks like they're definitely taking the Middle East by storm, and here's the beautiful thing, guys, they're taking corporate social responsibility very seriously, and they're focusing on 3 P's, that is people, planet and prosperity. Now listen guys, if you do want to find out more information regarding the statement of corporate social responsibility, check out the website, that is www.amt.tv. And here's the beautiful thing, guys, they also want to be a leader and set an example and reputation as a pioneer and member of the community. And in doing so, guys, they also have an AMT scholarship with SAE Institute in Dubai, UAE, so definitely check it out. And also, guys, Advanced Media is committed to persistently developing, organizing and hosting training workshops, seminars and community events that educate, inform and familiarize consumers with new equipment and the latest technological advances. So listen guys, do one thing. If you do want to support this channel, go to the website, that is www.amt.tv, and follow the social media channels as well. All of the details are in the show notes below. Next, Startup OI is global one tech platform for tech. It offers global high-paying tech jobs with flexibility in working time and location, global free tech events, and tech networks to connect with global like-minded engineers. A brilliant platform to listen to the tech experts in Metaverse and to grab their insights. Now listen, all you have to do is download the app Startup OI. If you're using an Android version, go to Google Store and App Store for iOS devices. Alternatively, you can also click on the show notes below to download Startup OI. Next, guys, listen, if you're into fitness, if you're into adventure, if you want to do something wild but still want to keep your health in check, there is a new podcast in town, a podcast focusing on obstacle course race in the Middle East. The podcast is called the Race Pace Podcast. So check out the Race Pace Podcast across all leading platforms. And the Race Pace Podcast is a peer-to-peer community-driven podcast where they talk all about obstacle course race in the Middle East, from Sandstorm to Spartan Race, from Tough Mudder to Desert Warrior Challenge, and also the Government Gov Games, and quite a lot more. The podcast has interviews with athletes locally and internationally to get inside scoop on how athletes prepare for obstacle course race. In the podcast, they also talk about interesting stories on why they are motivated to do obstacle course race. And that's not all. They also plan to release 7 NFTs. And these NFTs are no ordinary. These NFTs will represent every emirate in the UAE. And listen, guys, these NFTs are going to be absolutely massive. So do one thing, go to Spotify, go to iTunes, go to any leading podcasting platform and search for Rise in the Obstacle Course Race podcast. And finally, guys, not your keys, not your crypto. If you have dabbled with cryptocurrencies and now are seriously getting to protect your cryptocurrencies, there is no better way to protect it by using a hardware wallet. And this is where Ledger Wallet kicks in. And Ledger Wallets are hardware cryptocurrency wallets made by Ledger, a company headquartered in Paris, France. And Ledger's hardware wallets are multi-currency wallets that are used to store private keys for cryptocurrencies offline. And Ledger offers 2 hardware wallets, the Ledger Nano and Ledger Nano X wallets. They are world-class experts with extensive crypto security backgrounds. They continuously look for vulnerabilities in Ledger products in a constant effort to improve the level of security. Now, in today's world, securing these digital assets is a critical challenge, and this is where Ledger kicks in. So click the link below to buy your hardware wallet and support this podcast. It is a brilliant way to support this podcast. So what are you waiting for? The link is in the show notes below. Now, guys, since you've taken care of that, let's kickstart this episode by discussing the Bitcoin standard. So what I'm going to be doing next, guys, is I'm going to be going ahead and discussing the historical context of money and the rise of Bitcoin. So I'll go ahead and touch base on the evolution of money and how Bitcoin works. So let me know, guys, if you agree to some of these points or disagree to some of these points. So let's talk about the evolution of money, guys, and let's touch base on the barter system. Because look, guys, in the early human societies, people relied on barter system, isn't it? And they were directly exchanging goods and services. For example, guys, a farmer might trade a bushel of wheat for a pot made of butter. Now, there were a couple of challenges with this barter system, because the barter system usually has significant challenges, isn't it? And one of them is the double coincidence of wants. Because look, both parties had to want what the other are offering at the same time, as well as in the right quantity. Now that led to the introduction of money, guys, and this is exactly what the book explores and what that book actually states. To overcome the limitations of barter, various commodities began to be used as money. These include items like shells, cattle, and grains as well. Now these commodities, guys, had intrinsic value, and these commodities had value in and of themselves aside from the use of money. Now the example I can think of is cattle were valuable for food and labor, while grains, they could be eaten or planted, isn't it? And what happened, guys, over a period of time, metals such as gold and silver became the preferred form of money due to the durability, divisibility, and ease of transport. And gold and silver were valuable not just as money, but also for the use in jewelry and other applications as well. Now what that book explores, guys, is the development of coinage, and that led to standardization. And according to Dr. Saifedean Ammous in Bitcoin Standard, guys, around 600 BC, the Lydians in the modern-day Turkey created the first standardized coins, making the beginning of coinage. Now, what coins did, guys, is it made trade easier by providing a uniform measure of value, and the practice of minting coins spread across other civilizations, including the Greeks and Romans as well. And coins, guys, became a staple of the income, facilitating trade in vast empires. Now, over a period of time, guys, that led to the rise of paper money. Now, what is really interesting to note, guys, is that the Chinese were pioneers in using paper money during the Tang dynasty, that was between 618 to 907 AD, and initially these notes were backed by precious metals. Now, Marco Polo, guys, he traveled quite a lot, isn't it? And Marco Polo's travels included the concept of paper money to Europe, where it was gradually adopted, and European banks began issuing paper notes, which were easier to carry and use than coins. Eventually, guys, government started to issue fiat money currency that is not backed by a physical commodity but by the trust and authority of the government. And the classic example we can think of is the US dollar and also the euro and other national currencies as well. Now look, guys, so far as fiat currency is concerned, they do have a significant problem. Now it's really important to understand, guys, that fiat money is government issued currency which is not backed by a physical commodity. Its value is derived from the trust people place in the government that issues it. Now the US dollar, guys, the euro, the Japanese yen, and most of the national currencies are fiat currency. Now there are a couple of issues, guys, with the fiat currency, and in the Bitcoin Standard, guys, Dr. Saifedean Ammous goes ahead and explains it very beautifully. What that book actually states is that fiat currencies are susceptible to inflation because governments can print more at will, isn't it? And we have seen this, guys, since 2020. Over 60% of the US dollar has been printed in just the last 4 years, isn't it? And over time, guys, what happens is This reduces the purchasing power of money. For example, guys, you can think, what could a dollar buy way back in 1950? It is much less than what we can buy today, isn't it? And this leads to hyperinflation and also centralization. And in extreme cases, guys, excessive money printing can lead to hyperinflation, where the prices skyrocket and the currency loses almost all of its value. Now, historical example, guys, includes the Weimar Republic of Germany in 1920 and Zimbabwe in 2000. And so far centralization is concerned, guys, fiat money is controlled by central banks and governments, isn't it? Leading to potential issues like corruptions, mismanagement, and lack of transparency. And central banks make decisions that affect the entire economy, and that is sometimes with unintended consequences. And this gave rise to the emergence of Bitcoin, guys. Now look, we all know about the 2008 financial crisis, isn't it? And the 2008 financial crisis exposed the fragility of the global financial system that was characterized by excessive risk-taking by banks, lack of transparency, and bailout policy that saved institutions at the expense of taxpayers. Now what I'd really recommend you to do is, guys, check out this movie called as Big Short. I think it is, if not one of the most brilliant movies, it is definitely there on Netflix as well. It does cover beautifully what happened during the 2008 financial crisis, and this crisis eroded public trust in traditional financial institutions, and this, guys, gave birth to Bitcoin, isn't it? And in 2008, an individual or group using the pseudonymous name that is Satoshi Nakamoto released the Bitcoin white paper. And the white paper, guys, is called Bitcoin, a peer-to-peer electronic cash system. Now, the objective of Bitcoin was designed as a distributed digital currency operating without a centralized authority, relying on technology called blockchain to secure transactions and maintain trust. So look, guys, what Satoshi Nakamoto essentially did, he tried to combine cryptography, hashing algorithm, and mathematics. Now, there were cryptocurrencies that existed before Bitcoin as well, but what Satoshi Nakamoto was able to do, he was able to solve the double spending problem. And in the previous episodes, guys, I've gone ahead and discussed the dangers of double spending, isn't it? Now, so far central bank digital currency is concerned, guys, it is 100% possible to go ahead and double spend. Now, let me go ahead and touch base on some of the characteristics that are mentioned in the Bitcoin standard, that is scarcity, divisibility, portability, durability, and security. Now, look, guys, along with that, it is also important to truly understand the pillars of open blockchain, that is open source, publicly verifiable, censorship resistant, borderless, and neutral. But what I'm going to be doing, guys, is I'm going to be focusing only on these 4 points, that is scarcity, divisibility, portability, durability, and security. And so far scarcity is concerned, guys, I'm pretty much sure by now you know that Bitcoin has a fixed supply of 21 million coins in it, making it deflationary in nature, and this scarcity is encoded into Bitcoin's protocol and absolutely cannot be altered. Now, so far as divisibility is concerned, each Bitcoin can be divided into 100 million smaller units called Satoshis, allowing for microtransactions and making Bitcoin highly versatile. Now, so far as portability is concerned, guys, Bitcoin can be transferred quickly and cheaply across borders, making it more portable than traditional forms of money, which can often involve intermediaries and high fees. Think of gold, guys, for that matter. It is extremely expensive to go out and transfer gold or even physical cash, isn't it? Now, so far as durability and security is concerned, Bitcoin transactions are recorded on a blockchain, which is essentially a distributed ledger that is highly secure and resistant to tampering, and this ledger, guys, is maintained by a network of nodes that verify transactions through a consensus mechanism. And what I want to touch base next, guys, is I want to go ahead and discuss how Bitcoin fits into the historical context of money, and I'd like to make a quick comparison to gold, because Bitcoin, guys, now is referred to as digital gold, isn't it? Because it shares many properties with gold, such as scarcity as well as being a store of value. However, guys, unlike gold, Bitcoin is easily transferable and can be stored securely in digital form. And similar to gold, guys, Bitcoin is seen as a hedge against inflation and economic instability, isn't it? Offering a stable store of value over time. Now, one trend which I'm noticing, guys, is a lot of the CEOs of billion-dollar and trillion-dollar companies, they are edging more towards Bitcoin. And Franklin Templeton, CEO, did actually state, if there is a potential war, it would be much better to have Bitcoin than gold as well. Now look, so far as Bitcoin is concerned, let me go ahead and compare it with fiat money, because look, there are 2 problems with fiat money, that is decentralization and fixed supply, isn't it? Now, Bitcoin's distributed or decentralized nature means it is not subject to government control or manipulation, addressing the centralization problems of fiat money, and it is also fixed in supply, and its fixed supply, guys, provides a hedge against inflation and hyperinflation, offering a stable store of value over time. and unlike fiat currency, which can be printed at will, the issuance of Bitcoin is controlled by its algorithm. Now look, Bitcoin is a new paradigm of money, isn't it? Because what it does is it combines both of the worlds, and Bitcoin, guys, represents a new paradigm in the evolution of money, combining the best aspects of money like gold with the efficiency and convenience of digital transaction. And so far as the adoption is concerned, there is only one way to go ahead, isn't it? And as more people understand and trust Bitcoin, its adoption continues to grow, and institutional investors, companies, and even governments are starting to recognize its potential as a global digital currency. So let me know, guys, what are your thoughts regarding this? Now, what I'd really recommend you to do is, guys, definitely go ahead and read through the book that is Bitcoin Standard by Dr. Saifedean Ammous. It is definitely, if not the most pivotal book so far as Bitcoin adoption is concerned. So what I'm going to be doing next, guys, is I'm going to be talking about the economics of Bitcoin, and we'll try to understand its unique economic properties and how it stands out in the financial world. Now look, guys, understanding the economics of Bitcoin will give us a clear picture of why Bitcoin is often considered revolutionary, isn't it? So I'll go ahead and touch base on 5 core areas that the Bitcoin Standard talks about. The first one is Bitcoin's fixed supply and deflationary nature. The second one, guys, is Bitcoin versus traditional monetary policies. The third one, guys, is the role of miners in network security. The fourth one is Bitcoin's economic principles. And finally, guys, the fifth one is the impact of Bitcoin on global economics. So let me know, guys, what are your thoughts regarding this? So let's start off with Bitcoin's fixed supply and deflationary nature, and this is the concept of digital scarcity, isn't it? Now look, guys, Bitcoin supply is capped at 21 million coins, isn't it? And this cap is embedded in Bitcoin's protocol and is non-negotiable, unlike fiat currencies, which can be printed at absolutely any time, isn't it? And it is often printed in unlimited quantities by central bank. But so far as Bitcoin is concerned, guys, the supply is finite, isn't it? And this concept of digital scarcity is revolutionary. In the digital world, most assets like files or information can be replicated indefinitely. Bitcoin, guys, however, remains scarce by design, similar to precious metals like gold. Now look, guys, Satoshi Nakamoto did a brilliant move by making sure that the supply absolutely cannot be increased, isn't it? Now let me go ahead and touch base on Bitcoin's deflationary nature, because Bitcoin's issuance rate decreases over time through a process called as Bitcoin halving, and we did have a recent Bitcoin halving earlier this year, isn't it? And what happens, guys, is every 4 years, the reward for mining new blocks is halved, reducing the rate at which new Bitcoins are created. Now what kind of an impact does the deflationary nature has? This is absolutely one of the genius moves by Satoshi Nakamoto, because this deflationary aspect, guys, means that over time the purchasing power of Bitcoin would actually increase if demand continues to grow, while the supply remains limited. Now this does not happen in fiat currencies, isn't it? Now fiat currencies, they tend to lose value due to inflation, and if you looked at Biden inflation since the last 4 years, guys, it has definitely gone to the roof, isn't it? But so far as Bitcoin is concerned, guys, Bitcoin's value could appreciate, making it a potential hedge against inflation over a long period of time. Now let me go ahead and touch base on the second point, guys, that is Bitcoin versus traditional monetary policies. Now look, central banks are in full control, isn't it? And central banks control fiat currencies, and they can influence the supply through policies like quantitative easing, where they inject money into the economy by purchasing securities. Now what I'd really recommend you to do is, guys, go to YouTube and look at quantitative easing. You'd understand what the scams the banking industry has been doing. And to be honest, guys, quantitative easing is one of the reasons why which causes inflation, isn't it? And central banks often aim for a specific inflation rate to encourage economic growth. However, excessive money printing can lead to inflation, decreasing the currency's purchasing power. And in extreme cases, guys, this can result in hyperinflation, where the currency becomes nearly worthless. Now, is the US dollar heading towards that? I definitely don't see that happening, at least for the next couple of decades, to be honest. Maybe after that there is a very high possibility. Now, so far as Bitcoin is concerned, guys, the monetary policy is completely decentralized, isn't it? And Bitcoin operates on a decentralized network without a central entity, and this monetary policy is set by the protocol and upheld by the consensus among participants in the network. Now, so far supply is concerned, guys, we don't need to predict, isn't it? Because it is 100% a predictable supply, and Bitcoin's issuance, guys, follows a transparent, predetermined schedule. Now this predictability, guys, contrasts sharply with the often opaque and unpredictable policies of central banks, thereby providing a sense of stability and certainty. Now let me go ahead and touch base on the third point, guys, which I particularly like in the Bitcoin Standard. That is the role of miners in network security. Now look, Bitcoin uses something called as proof of work, isn't it? And because of that, miners compete to solve complex mathematical problems. And at this point of time, guys, you know that the first one to solve the problem gets to add a new block to the blockchain and receive a reward, isn't it? Now, when Bitcoin started, guys, initially miners received 50 Bitcoins per block, and this reward was gradually halved approximately every 4 years, from 50 to 25, then to 12.5, then to 6.25, and now I believe it is 3.125 as the net. Now this will continue until the halving at 21 million Bitcoins is mined, and this gradual reduction, guys, ensures a control and also predictable supply. Now so far as the network security is concerned, guys, this is the area where distributed or decentralization kicks in, and Bitcoin's distributed nature makes it highly secure, and thousands of nodes across the world maintain and verify the blockchain, making it extremely difficult and next to impossible for any single entity to control or manipulate it. Now there is something called as 51% attack, and in order to compromise the attack, guys, an attacker would need to control more than 50% of the mining power, which is economically and logistically unfeasible due to the vast amount of computational power required. Now what is really important to note, guys, is let's say if someone has these funds, if they were to do a 51% attack, they would be losing it completely, isn't it? It would be better off for them to go out and buy Bitcoin and make more money out of it. And because of the distributed nature and 51% attack, guys, Bitcoin's network is one of the most secure systems in existence. Now let me go ahead and touch base on Bitcoin's economic properties that are mentioned in the Bitcoin standard, guys. And it talks about store of value, medium of exchange, and unit of account as well. And it also touches base on price volatility. Now let me know, guys, whether you agree to it or disagree to it. Now look, in theory this thing sounds great, but Bitcoin is not used for these purposes, isn't it? Bitcoin started as a movement towards separation of money and state, but now, guys, Bitcoin is more of a store of value, isn't it? And Bitcoin is often compared to gold due to its scarcity and potential as a store of value. But unlike gold, guys, Bitcoin can be easily transferable and can be stored securely in digital form. Now so far as long-term value is concerned, despite its price volatility, historical data actually shows that Bitcoin has appreciated significantly over time, and this long-term appreciation attracts investors looking for an alternative to traditional assets. Now look, guys, if you look at the last 10 years data and make a comparison between gold and Bitcoin, Bitcoin has only had one direction, and that is in the upward direction, isn't it? Now so far as the second point is concerned, that is medium of exchange. Look, guys, Bitcoin enables peer-to-peer transactions without the need for intermediaries like bank, and this reduces transaction costs and increases efficiency, especially for international transfers, which can be slow and expensive through traditional banking system, isn't it? But look, guys, there is CBDCs in place, and looks like central bank digital currencies will definitely be reducing the use of Bitcoin so far as medium of exchange, so far as international transaction is concerned, isn't it? Now, all things being said, guys, the Bitcoin standard does recognize that Bitcoin is not yet widely adopted for everyday transactions. It is gaining acceptance among merchants and online platforms, but the acceptance rate is relatively less, isn't it? Now, there are solutions in place called as the Lightning Network that allows for faster and cheaper transactions, and they are being developed to enhance Bitcoin's utility as a medium of exchange. But look, guys, so far as Lightning Network is concerned, the adoption is extremely slow. And Roger Ver, guys, often called as Bitcoin Jesus, he actually said roughly around 6 years ago that Lightning Network is lightning years away from mainstream adoption. And as much as I hate saying this, looks like his statement was 100% spot on, isn't it? But what about Bitcoin as a unit of account, guys? Because we also need to factor volatility, isn't it? Now currently Bitcoin's price volatility makes it less suitable as a stable unit of account, and most goods and services are still priced in fiat currencies, isn't it? With Bitcoin being used more of a speculative asset or store of value, and this is where stablecoin kicks in, isn't it? So stablecoins can be used for day-to-day purchases because of the price volatility in Bitcoin and other cryptocurrencies. Now look, as all things being said, there is definitely future potential for Bitcoin. And as Bitcoin matures and its market stabilizes, it could potentially serve as a unit of account in niche market, let's say for international trade, where stable fiat currencies are unavailable. But look, guys, unfortunately, central banks all over the world, they are getting together and they are going ahead and launching central bank digital currency, isn't it? And just few weeks ago, guys, I talked about more than 100 countries are currently working or studying central bank digital currencies. And so far as UAE is concerned, UAE, Saudi Arabia, Thailand and other countries, they have something called a Bridge, which is more of a multi-CBDC, and they are in advanced stages of CBDCs. So these are things you need to factor as well. Now guys, let me go ahead and touch base on the final point, that is the impact of Bitcoin on global economies. Now look guys, Bitcoin promises financial inclusion, isn't it? And Bitcoin can provide financial services to the unbanked and also the underbanked population worldwide. With just a smartphone and internet access, guys, individuals can store, send and receive Bitcoin without needing a traditional bank. Now look guys, during times of war, there is also possibility to go ahead and send Bitcoin using sound waves. Now if you do need more information guys, try to look at Blockstream's website and it tells you how you can do that. Now so far as economic empowerment is concerned guys, in regions with unstable or oppressive financial systems, Bitcoin offers a way to preserve wealth and conduct transactions freely, bypassing government controls and restrictions. Now look guys, Bitcoin is a massive disruption to traditional finance, isn't it? And Bitcoin challenges the traditional banking model by offering an alternative to its distributed, transparent and secure, and this could lead to significant changes in how banks operate and interact with customers. Now so far as remittances is concerned, Bitcoin can significantly reduce the cost and increase the speed of international remittances, and migrant workers guys, they can send money back home and avoid high fees that are charged by traditional money transfer services, isn't it? Now look guys, this is one of the reasons why President Nayib Bukele invented and made Bitcoin a legal tender, isn't it? The intentions were definitely great, but I do feel that it would have been better for Salvadorians to go ahead and accept Ripple or XRP as a form of payment. Those are my honest thoughts. Now look guys, I'm definitely not a fan of XRP. I don't think so there is a use case of XRP as well, but XRP would have been an ideal form of payment so far as international remittances is concerned, particularly in a country like El Salvador. Now going back to Bitcoin guys and the Bitcoin standard, Dr. Saifedean Ammous also talks about investment and speculation. Now look guys, Bitcoin has emerged as a new asset class which has attracted retail and institutional investors. Now the whole spot Bitcoin ETF guys, this got approved because of giants like BlackRock, Franklin Templeton getting into the game, isn't it? And because of that guys, the prices of Bitcoin did actually reach a new all-time high. Now what the Bitcoin standard also states guys, that the performance of Bitcoin often correlates inversely with traditional markets, providing a diversification tool in investment portfolios. Now despite its potential guys, Bitcoin remains highly speculative, isn't it? And investors should be aware of the risks and volatility associated with Bitcoin investments. So let me know guys, what are your thoughts regarding the economics of Bitcoin, whether you agree to it or disagree to it. Now mind you guys, all of these points are by Dr. Saifedean Ammous for our Bitcoin standard. I would definitely recommend you to go ahead and read it. So what I want to do next guys is, I want to go ahead and talk about Bitcoin and the future of finance. So I'll go ahead and talk about Bitcoin as a store of value and medium of exchange, the impact of Bitcoin in international remittances and the unbanked population. And then guys, I also want to go ahead and delve how Bitcoin can reduce transaction costs and increase financial inclusion. And I will also touch base on the role of Bitcoin in future financial ecosystem, including decentralized finance. So let me know guys, what are your thoughts regarding this, and if you do have any additional comments or have read any of the book, mention them in the comments below. Now let me go ahead and start off with decentralized finance, because look guys, when you talk about decentralized finance or DeFi, it refers to a broad range of financial services built on blockchain networks, isn't it? And decentralized finance services guys operate without traditional intermediaries like bank or brokerages, and they do that using smart contracts, isn't it? Now there are key components guys of decentralized finance, that is lending and borrowing, decentralized exchanges, stable coins and yield farming as well. Now so far as lending and borrowing platforms is concerned, these platforms allows users to lend cryptocurrencies to others in exchanges for interest or to borrow cryptocurrencies by providing collateral, isn't it? Now so far as decentralized exchange is concerned guys, unlike traditional exchanges, decentralized exchanges or DEXs, they allow users to trade cryptocurrencies directly with each other, and they do that without a central entity, isn't it? And this guys reduces the risk of hacking and providing greater privacy. Now regarding stable coins guys, we know cryptocurrencies are pegged to stable assets like the US dollar, isn't it? And they offer stability to fiat currencies with the benefits of blockchain technology. Now so far as yield farming is concerned, this essentially involves lending or staking cryptocurrency assets to earn returns, often in the form of additional cryptocurrency tokens. Now my big question guys is, where does Bitcoin fit into this? So what I want to go ahead and discuss is Bitcoin's role in decentralized finance. Now look guys, while Ethereum dominates the DeFi space, and it does that because of smart contract capabilities, isn't it? Bitcoin can still participate through wrap tokens. Now what I'd really recommend you to do is guys, go to CoinMarketCap and look at wrap Bitcoin, and you would be surprised some of them who claim to be OGs in the cryptocurrency space, they are not even aware of what wrap Bitcoin is. And the ticker symbol guys for wrap Bitcoin is WBTC. Now, wrapped Bitcoin, guys, is essentially a token on Ethereum blockchain, and what that does is it represents Bitcoin and allows Bitcoin holders to engage with DeFi applications. Now, look, so far as the security is concerned, Bitcoin's network is highly secure, isn't it? This makes it a reliable asset for collateral in DeFi applications. Now, what about liquidity, guys? Because Bitcoin has a large market capitalization and now it also has widespread acceptance, this provides significant liquidity, which is extremely crucial for DeFi operations, isn't it? Now, next, guys, let me go ahead and touch base on Bitcoin as a hedge against economic uncertainty. Now, this part of time, guys, we know that Bitcoin is an essential store of value, isn't it? And Bitcoin is often referred to as digital gold because of its limited supply and function as a store of value. Now, gold, guys, has definitely been used for centuries as a hedge against inflation, isn't it? And also during times of economic instability. But Bitcoin is increasingly playing a similar role in digital age. So it's going to be really interesting to see, guys, what kind of an impact Bitcoin plays in the next coming decades. Now, what we've noticed since the last few months, guys, a lot of institutional adoption on Bitcoin, isn't it? And major financial institutions like BlackRock, Vanguard, Franklin Templeton, including hedge funds and asset managers, are increasingly allocating a portion of the portfolios onto Bitcoin, and companies like MicroStrategy and Tesla, they have heavily invested in Bitcoin as part of the treasury management strategies. And the reason why they're doing that, guys, is because they are treating it as a hedge against inflation and store of value, isn't it? So let me know, guys, what are your thoughts regarding Bitcoin Gold? Are you convinced that it is a hedge against economic uncertainties? Now, me personally, guys, at this point of time, I really am not sure, because during COVID-19, during times of Russia and Ukraine, and the chaos between Israel and Palestine, Bitcoin has definitely not turned out to be a safe haven, isn't it? Stablecoins, on the other hand, have definitely turned out to be a safe haven. Now, look, guys, so far fiat currency is concerned, concerns over excessive money printing by central banks have led to fears of long-term inflation and currency devaluation. Now, Bitcoin, guys, because of its fixed supply, can offer an alternative that is not subject to whims of central banks, isn't it? Now, let me go ahead and discuss Bitcoin's impact on traditional banking, guys, because according to the World Bank, about 1.7 billion adults remain unbanked globally as of now. Now, Bitcoin can provide individuals with access to financial services without the need for a traditional bank, and all that is required is a smartphone and internet access, isn't it? Now, one of the beauties of using Bitcoin for remittances, guys, is low transaction cost. Now, traditional banking, especially for international transactions, can be extremely expensive and slow, but so far as Bitcoin transactions are concerned, using second layer solutions like Lightning Network, things can happen much faster and cost effective as well. Now, there are quite a lot of innovation, guys, Dr. Saifedean talks about in his Bitcoin Standard book, and he's talking about Bitcoin savings account as well. Now, some platforms do offer interest-bearing Bitcoin accounts where users can deposit their Bitcoin and earn interest, similar to traditional saving accounts. Now, this can be an attractive option for those looking to grow their Bitcoin holdings without selling them. But look, guys, you always need to remember, not your keys, not your crypto. Now, BlockFi was a company that used to do that, but that went completely belly up. And even Celsius, they were notoriously known for doing something similar as well, and that went completely belly up as well. But there are Bitcoin loans as well, guys, and what platforms tend to do is they allow users to use their Bitcoin as collateral for loans, and this enables users to access liquidity without needing to sell their Bitcoin, which can be beneficial in a rising market. Now, let me go ahead and touch base on the evolution of financial products and services, and let me go ahead and touch base on real estate and stocks. The tokenization, guys, involves converting the rights to an asset like real estate or stocks into a digital token on a blockchain, isn't it? And this can make it easier to trade ownership of these assets. And guys, tokenization also helps in increased liquidity, isn't it? And by allowing fractional ownership, guys, tokenization can make high-value assets more accessible to a broader range of investors. And this democratization of investment, guys, can lead to increased market liquidity and more efficient capital allocation. Now, let me go ahead and touch base on smart contract and automation, guys, that Dr. Saifedean talks about. Now, what he says, guys, is that smart contracts are self-executing contracts with the terms of agreement directly written into code, isn't it? And smart contracts can automate various financial processes, from payments to regulatory compliance, thereby reducing the need for intermediaries. And smart contracts, guys, can automate complex financial transactions, such as derivatives trading and insurance payout as well. And this reduces the potential of human error and fraud, thereby increasing efficiency and lowering cost. Now, look, there are regulatory considerations and challenges as well. Now, the regulatory environment for Bitcoin, guys, varies widely across different countries. Now, we know about El Salvador. they have definitely gone ahead and embraced Bitcoin, isn't it? But on the other hand, countries like China, they have very strong regulations and bans as well. Even a country like India, guys, they often have love-hate relationship, isn't it? Now, so far as compliance is concerned, companies and platforms dealing with Bitcoin must navigate complex requirements, including anti-money laundering and even KYC regulations. Now, it's important to note, guys, that these measures aim to prevent illegal activities, but at the same time, they can also create barriers to entry and stifle innovation, isn't it? So when you talk about regulations, guys, regulations are definitely great as long as they protect users and investors. But the moment they go out and stifle innovation, that is one area where regulations does not fit well. Now in the book, guys, he also talks about potential for global standards, and what Dr. Saifedean Ammous states is that there is an ongoing discussion about creating global regulatory standards for cryptocurrencies, and they want to do it to provide clarity and consistency. Now, these standards, guys, could foster broader adoption and integration in Bitcoin into the global financial system, isn't it? But look, guys, he also talks about the balance between innovation and security, and regulators face the challenge of balancing the need for protecting customers and preventing illicit activities with the desire to foster innovation in the financial sector, and they need to strike the right balance, and it is extremely crucial for sustainable growth of Bitcoin and blockchain technology. Now look, so far as Dubai's VARA is concerned, guys, it is one of the best regulatory authorities probably in the entire world, isn't it? But at the same time, guys, we also need to understand that in Dubai and in UAE, we cannot go out and deal or make any transactions so far as privacy coins are concerned, and all of the cryptocurrency exchanges, they cannot go out and offer privacy coins like Monero. So these are things you need to factor as well when you talk about regulations. And as I mentioned earlier, guys, regulations are definitely great as long as they protect investors and consumers. But the moment they go out and stifle innovation, that is an area we should not be happy about, isn't it? So let me know, guys, what are your thoughts regarding Bitcoin and blockchain technology having the potential to transform the financial system to decentralized finance, and can Bitcoin or cryptocurrency serve as a hedge against economic uncertainties, and can it actually challenge traditional banking? Now look, so far as Bitcoin and cryptocurrency and innovation is concerned, they're definitely evolving, isn't it? And regulatory challenges definitely need to be taken care as well. So let me know, guys, what are your thoughts regarding this, and if you do have anything that you want to mention, drop me an email to info@blockchaindxb.com. Now look, guys, we have explored the historical context of Bitcoin, its economic properties, and its potential to transform the financial system, isn't it? Now, let's take a critical look at Bitcoin, focusing on the criticism and challenges it faces. So critical, guys, that we truly understand these issues, and understanding these issues is extremely essential for anyone involved in Bitcoin ecosystem, or for anyone considering it as an investment. So let's talk about the environmental impact of Bitcoin mining. Now look, as you know by now, that Bitcoin uses something called as proof of work mechanism, isn't it? Also called as POW. And Bitcoin's consensus mechanism, that is proof of work, relies on miners who compete to solve complex mathematical problems. And this process, guys, is energy intensive and does require substantial computational power, isn't it? And as of 2023, guys, Bitcoin's annual energy consumption was estimated to be around 120 terawatt hours. If I'm not mistaken, guys, in 2024, this is pumped up to 140 terawatt hours. Now, this energy consumption, guys, is comparable to the energy usage of entire countries like Argentina. And this amount of energy utilization, guys, has raised concerns about the sustainability of Bitcoin mining. And there are definitely really strong environmental concerns, isn't it? And the environmental impact of Bitcoin mining is definitely significant, particularly because a large portion of the energy use comes from non-renewable sources, and this contributes to carbon emission and also climate change. Now look, there are solutions for this as well, and renewable energy is definitely one of them, and there are so many initiatives, guys, to power Bitcoin mining operations using renewable energy, such as wind, solar, and even hydroelectric power. And some mining farms are already leveraging these sources to reduce the carbon footprint. Now look, guys, so far as Oman is concerned, the Oman government is trying to do something similar as well. Now look, guys, there are also innovations in energy efficiency space, and innovations in mining hardware and software aim to increase energy efficiency, reducing the overall energy consumption per transaction. Now, while Bitcoin is unlikely or next to impossible to switch from proof of work to a less energy-intensive consensus mechanism like proof of stake, other cryptocurrencies have already made this transition successfully, isn't it? Ethereum has switched from proof of work to proof of stake, and this has considerably reduced the environmental impact, more than 99% to be honest. Now look, as environmental impact is not the only issue with Bitcoin. As of now, 2024, there are still scalability issues, and Bitcoin network guys can process approximately 7 transactions per second, which is extremely low, much lower than traditional payments like Visa that can handle up to 24,000 transactions per second. Now this limitation guys definitely affects Bitcoin's stability to function as a global payment system, isn't it? And what happens guys is, during periods of high demand, Bitcoin networks becomes extremely congested, leading to slower transaction times and increased fees as well. This guys undermines its utility and user experience. Now look guys, since the halving that did actually take place this year, we also have runes in Bitcoin blockchain, isn't it? And you also have ordinal inscriptions. Now so far as miners are concerned, they're definitely happy about it because it is additional fees for them, isn't it? But so far as user experience is concerned and scalability is concerned, it is definitely not a good thing. But look guys, there are scaling solutions, and layer 2 solution is one of them. And the first one I'd like to talk about is Lightning Network. And the Lightning Network guys is a second layer protocol that enables off-chain transactions which are later settled on Bitcoin blockchain. And Lightning Network guys allows for faster and cheaper transactions, thereby improving scalability. The second one guys is state channels. Now similar to Lightning Network guys, state channels allow parties to transact off-chain and only record the final state of the blockchain, thereby reducing the load on the main network. And the third one guys is segregated witness. And look guys, this is the whole drama between the block size, isn't it? And there was so much of argument during the 2016 and 17 era. So far as block size increase is concerned guys, SegWit is a protocol upgrade that separates transaction signatures, also called as witness data, from transaction data. Now what this does is guys, it effectively increases the block size limit, allowing for more transactions per block. And there is another thing called as compatibility guys, and SegWit guys also enables other scaling solutions and improvements by providing a more flexible and efficient transaction format. Now look guys, apart from scaling solutions, there's regulatory and legal challenges as well, isn't it? Now Bitcoin's regulatory environment varies widely across different countries. Some nations like El Salvador have embraced Bitcoin as a legal tender, while other countries like China and India, they have imposed strict ban on cryptocurrency activities. Now this inconsistency definitely creates uncertainty for users, investors and businesses, right? Now regulatory challenges guys can significantly impact Bitcoin's price and adoption. For example guys, favorable regulations can definitely enhance Bitcoin's legitimacy and encourage adoption, which we see quite a lot in Dubai, isn't it? But at the same time guys, stricter regulations, let's say in China and India, can limit its use and negatively affect its market value. Now so far as compliance and legal issues is concerned guys, there are two major things, that is AML, that is anti-money laundering, and KYC, isn't it? Now cryptocurrency exchanges and businesses are required to implement AML and KYC measures to prevent illegal activities such as money laundering and terrorist financing. Now while these measures are necessary, they can be burdensome for businesses and users. And there is also privacy concerns guys, and one of Bitcoin's main attraction is its potential for privacy and it being pseudonymous. However guys, strict anti-money laundering and KYC regulations can compromise these features, thereby reducing Bitcoin's appeal to some users. Now so far as taxation is concerned guys, different countries have different approaches to taxing Bitcoin transactions and holding. Now some treat Bitcoin as property, which is subject to capital gain tax, while others may have different classification for tax implications, isn't it? Now regarding taxation guys, there was massive drama regarding Roger Ver, who's often called as Bitcoin Jesus, isn't it? Because what happened guys is, he used to be an American, but while he was in America, looks like he got a lot of Bitcoin, and that was when Bitcoin had a fork. But he then left the United States of America, and looks like he did not pay the tax, and because of that he was arrested in Spain. So these are things you need to think about so far as Bitcoin taxation is concerned. And recently guys, in my Crypto and Coffee Date podcast, I talked about a Republican politician, that is Matt Gaetz. He has actually introduced a bill that will allow citizens to go out and pay taxes in Bitcoin. Now I'm not sure who'd want to pay your taxes in Bitcoin, but definitely a brilliant use case. Now look, so far as Bitcoin is concerned, the lack of clear and consistent tax guidelines can lead to confusion and potential legal issue for users, and staying compliant with tax regulations can be extremely challenging, especially for those with significant or frequent Bitcoin transactions. Now apart from these guys, there are also security concerns, isn't it? There's the saying guys, not your keys, not your crypto. Look, once you lose your keys, your entire Bitcoin is completely gone, isn't it? But so far security is concerned guys, there are also a lot of security threats And there are also network attacks as well, isn't it? Now, so far cybersecurity threats is concerned, guys, cryptocurrency exchanges have been frequent targets of hacking attacks. Now, we all know what happened to Mt. Gox going back to 2014, isn't it? That has resulted in the loss of millions of dollars worth of Bitcoin, shaking investor confidence. And despite improvements in security, guys, exchanges definitely remain a potential weak point. And in 2018 or 19, guys, there was a massive hack in Binance as well. And if I'm not mistaken, roughly 40,000 Bitcoins were completely compromised as well. And Bitcoin users, guys, are often targeted by phishing attacks and scams. And as the ecosystem grows, so do the number of sophistication of fraudulent schemes aimed at stealing Bitcoin. Now, roughly around a year ago, guys, one of the OGs of Bitcoin and one of the software developers, he was hacked as well. And he lost roughly around $200 million worth of Bitcoin as well. So users must remain vigilant and employ strong security practices. Now, let me go into it based on network attacks, guys, because a 51% attack occurs when a single entity gains control of more than 50% of the network's mining power, thereby allowing them to manipulate the blockchain. Now, while this is risky and extremely unlikely due to the immense computational power required, it is theoretically still a risk, and once a person can get 50% control over the mining power, they can easily go out and do double spending. And in a 51% attack, guys, an attacker could double spend their coins, undermining trust in Bitcoin's immutability, and preventing such attacks require maintaining a decentralized and widely distributed mining network. Now, let me go ahead and touch base on market volatility and speculation, guys. Because look, Bitcoin's price is notoriously volatile, isn't it? With extremely large price swings occurring over a short period. Now, these fluctuations, guys, are driven by market speculations, regulatory news, macroeconomic trends, and also technological developments. And this high volatility, guys, makes Bitcoin an extremely risky investment. Now, while it can still offer substantial returns, it can also result in significant losses as well. And because of this extreme price volatility, it is unsuitable for risk-averse investors or for those seeking stable returns, isn't it? Now, let me go ahead and touch base on the speculative nature of Bitcoin. Now, look, as Bitcoin markets are susceptible to manipulation, and this is due to the relatively low liquidity compared to traditional financial markets. Now, look, guys, so far as whales are concerned, or large holders of Bitcoin, they can definitely influence prices by buying or selling large amounts, and that is unfortunately happening quite a lot in the Bitcoin and cryptocurrency spaces in it. Bitcoin does not have underlying assets or earnings to provide a basis for valuation. Its price is driven largely by supply and demand dynamics, which is what Austrian economics is in it, and this makes it extremely challenging to assess its intrinsic value. So let me know, guys, what are your thoughts regarding the criticism and challenges facing Bitcoin, which is by the book written by Dr. Saifedean Ammous in the Bitcoin Standard. Now, look, guys, understanding these issues is crucial for anyone getting involved in Bitcoin ecosystem. So let me know what are your thoughts regarding this, and if you do have any points, guys, drop me an email to info@blockchaindxb.com. Now, that's about all, guys, regarding the Bitcoin Standard. And we have taken a deep dive into the Bitcoin Standard by Dr. Saifedean Ammous. Now, throughout this episode, guys, we've covered the historical evolution of money from barter system to Bitcoin, tracing the development of economic systems over millennia, isn't it? We've also tried to understand what sound money is, what it means, what is important, and how Bitcoin fits into the framework. We've also looked at the technical insights, that is Bitcoin's decentralized or distributed structure, security mechanism, and why these features are revolutionary. We've also looked at the economic implications, guys, and how Bitcoin can serve as a hedge against inflation and its potential to act as a deflationary currency. We've also done comparative analysis as well, isn't it? We've looked at the strength and weakness of Bitcoin compared to fiat currencies and also other financial systems. Now, look, guys, we've also addressed some of the common criticism, and we have explored the robust defenses provided by Dr. Saifedean Ammous. Now, look, guys, the future is definitely uncertain, and speculating on the future trajectory of Bitcoin and its possible effects on the global economy you also discussed. So I really hope that you found this episode enlightening, and if you did enjoy this episode, guys, what I'd really recommend you to do is give it a 5-star rating and share the word across. And if you do have any feedback or suggestions, mention them in the comments below or drop me an email to info@blockchaindxb.com. So thanks so much for listening, guys, and have a nice one. Bye-bye.